Happy Thursday, or let me say happy first day of the summer. Today is June 20th, 2024. You're watching John McEntyre Show live. I'm John McEntyre, and now I can go back to that happy first day of summer. It's been summer for a couple of weeks around here, um, and I actually heard someone say on the news, a news anchor said, this summer is doing a little bit too much too early. So, and I agree. Yeah, it's hot out there, and so, but we're inside and we're going to move forward with this live show today. You know the routine. I'm going to share a few wallet wins. Going to do a question, and the question today is about home equity loans, and then we will close out with the question of the day. So let's get into the first wallet win, which is I was able to quit my second job because I have paid off all of my debts other than my home. And yeah, that's a big wallet win. That's a serious wallet win. Showed a lot of dedication and commitment, because a lot of times that's the best and quickest way to handle those type of situations is taking on a second job. And it's usually a lot of times it's usually something that you normally wouldn't do. You just bite the bullet and do it. It pays. It works around your schedule, around your other job and your other responsibilities, family and everything. So that takes a lot of commitment and dedication. So I commend this person on being able to stick with it, to accomplish their goals and not be attached to it. Now there are some, I will say, and the pandemic, the quarantine, really the positives. There wasn't many positives to the quarantine, but a couple of one positive, big positive. Some good businesses came out of the quarantine because people were forced to, you know, to pivot. And pivot is a big time word now, and quarantine was a forced pivot. And so there are some good businesses that were side hustles, and now they're the front hustles. They're the only hustle. And so I read story after story of people who said, well, I had to do something because I had to keep paying my bills. I had to do this. I had to do that. And so I started this side hustle, and then it became successful, and now it's my main hustle. And I didn't have to go back to my job or whatever. So yeah, so that was a good wallet win. Wallet win number two, I got my health in check and no longer have to take some of my expensive medications. So yes, that is a big wallet win because that's one of the largest expensive, especially as you get older. Is Did I say expensive or expenses? Well, expenses. It's supposed to be expenses. Um, One of the largest expenses as you age is going to be medication, especially if you didn't do a good job with taking care of health earlier. And now those medications, they can get very expensive. Believe me, we look at a lot of prescription drug plans and formularies, and uh, one drug plan will pay this much, another one will only pay this much, and you have to pay this much out of pocket, and you have to balance that. So yeah, a couple of expensive medications can bust the budget big time. So yeah, to actually do away with the root cause, not just a band-aid type thing, but did away with the root cause, just come off the medication entirely. Yeah, that's a very good wallet win. And wallet win number three is I downsized my home now, and I was able to put the proceeds in a bank. Now I have a house I can handle, and I actually have money in the bank. So yeah, double win. A lot of times, people they buy more house than they need, and then they are what you call house poor. And so, and that can be a big time drain on the finances. Three people living in a 7,000 square foot house, and only is only in one room most of the time. So you having to pay for that space. You're having to heat the space. You're having to maintain the space. Clean it, do all of these things. So it's taking up time, expenses, and I've seen in that particular situation, it actually triggered a thought, uh, and I've said it a couple of times. A lot of times foreclosures happen because the person has went into resenting their home is too much for them to handle, and it's causing problems in other areas like financially and things like that. And now that house that was once their dream house has become a burden to them, and they're going to being resentful of the place. And it used to be one of those things that went through one end out of the other, but then as I got more involved in financial counseling, financial therapy, they're talking about these types of things to really listen for, to actually hear a person say, um, well, house was a burden anyway. Oh, okay. Well, they pretty much released that house. They moved out. Now it's just the process of going through the foreclosure, whatever, or the quick sale or the short sale or whatever to get it sold. Um, but that was something serious, and you hear it a lot. It's just that most professionals and most people just don't pay attention. They don't pay attention to that. I did a show about scripts a month or so ago, and that script is a thought that goes on in a person's mind, and in this subconscious and automatic. And sometimes you say something so much. I remember a lady. She was saying that every day she pulled up to that house, she didn't want to leave work, because it's not that she didn't want to come home to the family. It's just that the house was it irritated. It was a trigger. Oh, okay. So once the house was sold and they were able to move and downsize and do all of this, she was happy again. So her unhappiness had a lot to do with uh, uh, one of the largest purchases that you'll ever make. Outside of maybe building a large retirement fund or something like that, or having a large investment portfolio. So yeah, that was a good one. Downsize my home. Now I have extra money in the bank from the proceeds. So yeah, that should create some financial health and wellness and security there. So we had three good wallet wins today. And now let's get into this question. And the question is, I have been working on reducing my debts. Someone suggested that I use the equity in my home to pay off the debts completely. Is this a good idea? And I'm going to go back to my old standby. It depends. Um, all in all, I'm really not a fan of home equity loans or home equity lines of credit, because it is using a loan to, that your house is the collateral, and it's like a second mortgage. It's a second loan, another loan on the house. And to really understand why they were created goes back to the Depression time, in the 30s, and it was really with farmers. It started out with farmers because during the Depression, a lot of farmers they were, in danger of losing their property, and so banks and savings and loans they came up with a plan to keep so many, to keep these farmers from losing their houses and property by saying, okay, uh, your property is worth 100,000, you owe 50. We'll give you 25,000 because it's equity sitting there. That's the difference. That is your money, and so this should help you along. Um, and on paper, it worked very well, and for a few farmers, it did work. But because of the depression, it was a little bit longer than they anticipated, so it really didn't do too much for them. A lot of the farmers still ended up losing their property, as we know what the Great Depression did to a lot of people financially. So that's really where it came from and where it started. Well, the banks, knowing that it was in banks and savings and loans at the time, um, it was still considered a good option for people, and it was really just for home improvements. That's really what it was for. That's what it was marketed as after Great Depression. It was still part of helping those types of situations, but also this group of people, they buy their home and now they would like a better kitchen. Now they would like to add a bedroom onto the house, or do some type of improvement. And the bank was happy with that because they were really protecting their investment, is what they were doing. If you take your equity, you borrow the money back. So we're giving you money again. We can charge interest on it, and you're going to improve our asset. We talked about assets and liabilities before. That's why I say the house is normally it is an asset, but not on your financial statement. It's an asset on the bank's financial statement because they loan money and they're getting interest on the money, and it's backed by real estate. Well, over here, you don't make loan payments, you don't pay your taxes, you can get in trouble. So and we don't really know if it is a financial asset. It's just a different type of an asset. So the banks, they were happy to loan this money to, okay, you're going to fix up our investment for us. And so that's where it really found its groove, and it was doing well. And then you went into 1986 to where other loans, you couldn't write the interest off on taxes. 1986 was a big year in finances, period. In the market, real estate, everything. A lot of tax reforms happened during that time, and one of them is some of the tax write-offs went away, and the home mortgage loan, interest on the home mortgage was one of the last big ones that you could actually write off. So home equity loans actually took off again. They like spiked again because you could actually write that interest off. So you've improved your property, you've improved your home, and this. Well, then it started to level off, and so the banks were like, okay, well, here's what we'll do now, and it's all marketing. Instead of just marketing it as a home improvement loan, because that's really like what it was called, just like in general. People were just calling it in general home improvement. I'm going to get a home improvement loan. Oh, I'm borrowing the equity on my property, and I'm going to add a pool, or I'm going to do something great to the house. Well, the banks was like, okay, we need to trigger some more of these types of loans because they're backed by real estate. You don't have to use it to improve your home. You can pay off debts. You can go on a vacation. You can do whatever you want to with the money. It's yours. We're going to give it to you. It's as long as you qualify for it, and it's easy to qualify for those types of loans, because like I say, I'm going to keep stressing it. It is backed by real estate, your real estate, their asset. You're improving their asset. Well, then they was like, okay, well, let's just make the loan. We're in the business of loaning money. So now people are using them in the not so good way, which is the way I really don't care too much for. Um, you're taking equity out of your home to pay for an extravagant vacation, or to buy luxuries or whatever. These luxuries that are losing value, you're putting your house up for collateral over something that you're going to lose, that's losing value. You couldn't sell it to pay this loan off. So your home could be in jeopardy over some luxury. That's when I'm not a big fan of it. And I'll get into it. The pros, like I said, that was the pros using it. Uh, I've seen people use home equity loans, very successful. They've been successful with them. These are very responsible people financially anyway. Uh, Most of probably 90% of the time, it was to improve the house. That's what it was for. It was improve the house. This is either it was their house that they're just going to live in the rest of their life. They most sometimes they paid it off, and they're like, I'm going to borrow some of my equity to add that home office, or that man cave, or maybe the wife, she wanted a room specifically for herself, for her reading and doing it, her room. And so that's where I agree with it. These are very financially responsible people. And like I say, the home improvement, um, and in some cases, if you've shown that you can be responsible with money, you're serious about taking care of debts and moving on, then yes, but proceed with caution. you know Pretty much proceed with caution, because if some of your loans are, some of the debt that you have is high interest, and you would get and most of the time home equity loans are lower interest rated loans, sure, do it and proceed with caution, stick to the plan, and make it happen. And I'll add this to it: if, say, for instance, all of your loans total $500 a month, and your home equity loan is 350, for instance, don't just pay 350. Keep paying 500. Get the loan paid off as quickly as possible too. You know, use it as a tool to get these other high interest debts out of the way, and then you get that back out of the way. Get it gone as quickly as possible also, because you just don't want your home in jeopardy at any time. You know, so those are the reasons I would say yes. The cons of it, like I say, going back to the history of these types of loans, they were mainly used by people who just weren't responsible financially, and so it caused a lot of losses. And the banks, they were fine with it because they were getting this asset, cheap. They were getting a cheap, valuable home and selling it, and making money. And I know they have to spend, give you back the splits and all of this type of stuff, but still, they still win. The banks are going to win. They're going to win. So the people that are using these, when I say no, is you're using it as a quick fix. Because I've seen people say, yes, I'm doing this. I'm going to use my equity to pull out I'm going to pull out some equity and pay off these loans. And then they do it. And then a couple of years later, they're back even worse. They're in a worse condition now because they just didn't do what they said they were going to do. So that's the first person. Number two, you're just not financially literate enough to handle it just yet. So what I always say is focus on building the solid money habits first, and then if you've proven that you can handle it, then sure, you know. But if you're doing what you're supposed to do anyway, you probably won't need it. You until you maybe want to do the fixing up the property, improving your home or whatever. And another reason why, and I've seen this one, and this one is hard. You end up upside down in your property. And what I mean is you owe more on the house than what it's worth. This new loan is actually put you upside down. Yeah, and it used to be quite common. It's not as common now, but it still does happen because people they forget, and these are the ones, they just don't have good money habits and not financially literate. They just see the money's there and they want it, and they get as much as they can, and now they're upside down, and now they're back in trouble over here. They can't make their payments over here, and then they have too much money, is more money is owed on the house than what it's worth, and then the market's bad. It also takes the market like tanking. And it happened, great, not the depression, recession 2009, that happened quite a bit. That's when it happened. Values of homes fell in certain markets, and these people had these extra loans on them, and they didn't have any choice. They took a bath. And so those are the reasons why I would say no. So that's my answer. It depends. Are you financially, are you responsible? Are you financially literate? You don't have a whole lot of bad things going on, debt problems and all of that. You just want to use it to fix up the home or whatever, or you do have a plan of paying off these debts and getting this thing back out of the way, getting it paid off as quickly as possible. Sure. Not financially literate, looking for a quick fix, or going to put your house in jeopardy by ending up upside down. No, just don't do it. So I hope that answered. If you have any questions, want to talk more about that, you can contact us and we'll walk you through it, because for sake of time here. So hope that answered the question. Let's get into the question of the day before I go. And my question of the day is, what's something you've spent way too much money on? What is something you have spent way too much money on? So, And you see where that question come from, because a lot of times people do something and they, man, I spent too much money there and now it's throwing me into trouble. And so, yeah. Or some people, they just spent more money than they should have, and they kind of regret it. Like, I really didn't need that. So that's the question of the day. What's something you spent way too much money on? All right. So those of you that want help with your finances, give us a call. It doesn't matter what area, whatever's triggered it. We'll sit down and come up with a plan for your money to get you to financial health and wellness. So tune in tomorrow, same time. This is John McEntyre signing off.